we are facing an economic downturn. Most economies are either below trend, they've already slowed to below their average growth, the US being a good example, or probably they're on the brink of recession, the UK and the rest of Europe being a good example there. But it's a rather unusual downturn, partly because it's been triggered by rising inflation as a result of supply side shocks. Simon, you mentioned that, but also because it's a time when the labour markets are very strong, reflecting shifts in labour market participation since the pandemic. One of the other things that makes this downturn rather unusual and in some sense more encouraging than we've seen in many previous downturns, particularly around the financial crisis, is that private sector balance sheets are actually quite healthy. What do we mean by that? Well, actually, the aggregate level of debt in the corporate sector is relatively low. Banks have very healthy balance sheets, partly reflecting tougher regulation that was put in place after the financial crisis. And even though many households are facing a very difficult time in terms of real incomes being squeezed by higher energy and food costs, aggregate savings in households are reasonably good as well. So that means that while there may well be an economic downturn, it may not trigger the kind of negative spirals and vicious cycles that we've seen in some of the other downturns in the past. But the bottom line is that we are going through a difficult cycle, weak economic growth, higher inflation, and that means higher interest rates and weaker asset markets.